Let's take a look at some newer trade opportunities for the week. Okay, now if you take a look at the dollar index, you do see that we talked about this on Monday as well, right? Price has already tagged the expected level, and then of course we see here very clear 1, 2, 3. Okay, so right now on the 4-hour time frame, we are seeing a very nice rejection of that fib expectation. Again, we always talk about that, right? 1, 2, 3. You can see this is the fib expectation. Price is giving us a pretty decent reaction from there. Okay, a mini impulse push to the downside. On the 1-hour time frame, you can see that as well, right? This is a crawl, a slow move, and then after that, an impulse, and then right now it seems like it's forming a flat. Okay, if that happens, then of course we can continue expect the dollar to come down for the week. Okay, and again, this is not it can be a correction to the downside. It can be a shift, right? Which means that the continuation to the downside can be there, right? This is like the daily correction, and then from there it continue to drop. Okay, so we won't know until it starts to give us more sign, right? But right now, this is definitely a key level that we are observing, and we do see some kind of reaction from there. Okay, so if that were to happen, then of course over here you can see in my watch list today we are watching on the euro dollar and the gold. Okay, so if the dollar were to kind of like do a temporary U-turn, okay, then of course euro dollar and gold will give us some decent opportunity. Okay, so we'll talk about euro dollar first. You can see over here on the daily chart. Okay, we do see very obvious 1, 2, 3. Okay, we do have some fib expectation. Price has already hit there as well. Okay, one thing though is that in terms of Elliott wave, okay, most of the time after we see a 5 wave, 1, 2, 3, 4, 5, that correction down likely comes towards like wave 4. Okay, most of the time it does that. So as of now, it haven't really do it. So maybe this can still make into like a bigger corrective pattern that looks something like this, right? Then from there, you have your 1, 2, 3 as well. Okay, and this can be like the bigger corrective. Okay, so have that in mind while we are talking about some ideas and opportunity this week, right? Have that in mind as well, right? There's a possibility this can develop into a bigger correction. Now, if I go down to the 4-hour time frame, you can again see we have a very nice. So on the daily, we have this 1, 2, 3, right? On the 4-hour time frame, we have this smaller 1, 2, 3. Okay, again, the fit is there as well. This 3 wave now. Okay, so and we are seeing some kind of a minor reaction over here, right? A bounce. Okay, so not only on the daily we are seeing that, we are also starting to see it on the 4-hour. And if I go down to the 1-hour time frame, okay, you do see quite a decent bounce, right? On the 1-hour time frame, this is like a V shape, okay, and then right now this is forming that corrective pattern. So the idea here obviously is it becomes an attractive trade to take because we are right at the close to the bottom, right? So if this were to reverse and go up, then there will be quite a big room for price to actually move, right? And we are able to capitalize on that, even if this is considered more like a shorter term because it's a 1-hour time frame. Okay, so this is where I want to keep an eye on this because looking at this, then if price were to go up, expectation of 3 wave, 1, 2, 3, we can trade the third move up, right? That becomes attractive. Okay, so there are 2 ways to get involved in it. All right, so let me just remove this right now. Okay, let me put this in here. Okay, now there are 2 ways we can get involved, right? One is, of course, the breakout of it. The other is just a simple fib retracement that would do the work as well. Okay, so now one way is to do this, right? Of course, with the retracement, we can do the equal leg 1:1. Okay, let me put in that as well. Yeah, they are about there, right? Let's take this. Okay, so to be a little bit more precise, this is how it looks like, right? So we can also see this has a possibility of 1, 2, 3, okay, and that forms kind of like a potential push to the upside, right? So if you're looking at the trade somewhere around here, okay, and if it just comes up here, then of course your risk reward is really worth it, right? So the idea is, of course, it's a little bit more aggressive because we're looking at 1 hour and we're looking at a very, very small pattern. Okay, not something that I tend to take over and over again, but I think the opportunity is there. Okay, because if you can see, right, again, this is a very sharp push down. Usually, if it's a very sharp push down, the correction can be bigger. Okay, so if you're able to capitalize on this to the upside, then you know, it might be a worthwhile trade. Okay, the only thing I'm a little bit not too comfortable with it is obviously the pattern is a bit small. Okay, that's the only thing. Okay, so there are one way is to take it from this pending, right? The other one, of course, is you take it from a breakout perspective. Okay, so I don't really like the breakout in a way, because if I were to take the breakout, my stop loss will be not worth the risk reward. Okay, let me just do a very quick measurement on that. Okay, let me pull in this. That's the minimum expectation we can look out for. Okay, 50%. So if I were to trade the breakout, okay, the risk reward is not going to be worth it. Yeah, okay, it's just 1.4. But if I were to trade it here based on this pending limit, then yeah, the risk reward is definitely more worthwhile. Okay, so what I would suggest is you know, there are two ways to get involved. Obviously, the breakout is a safer technique to get involved in. Okay, but for now, I will be putting in more of like a pending order. Okay, so I'll add this in. Okay, but I want you all to be aware that this is definitely, okay, this is definitely a little bit higher risk, because again, we are looking at a reversal, and we are looking at a very small pattern over here, right? Okay, so the entry will be at 187. Okay, and the range here is pretty tight, right? 186, right? So that's about 10 pips. The stop loss here, we're gonna put it at 1845. Okay, pretty tight, right? Pretty tight. Okay, so it's about 20 pips. The target is 197. Okay, yeah, right. So do take note of this. We'll put this up. Let's talk about the active short-term trade that we have first. Okay, that's on euro dollar. Okay, this run is pretty solid. Very easy trade, right? So you can see this was more on the 1 hour time frame. Okay, again, we talk about the patterns repeating itself over and over again. This is like one of the easiest trade to manage, honestly. Okay, we have a very clean 1, 2, 3. We have a very clean retest, kind of bounce off the 100%. Okay, and from there it just took off, right? And within just a day, you are running in solid profits. This is the, you know, again, use this as a case study, screenshot it or whatever, right? Put it into a trading journal and know that this is kind of like the ideal setup that you want. Okay, and of course, yesterday we talked about we're not just trading this, right? We are looking to buy because of, even on the higher time frame, there are few factors, few reasons as to why we are looking at this trade. Okay, and these are the exact trades that you want to take over and over again, simply because of how, you know, when this take off like that, okay, psychologically it's so easy to handle, right? Because what you do is you just shift your stocks to break even, let it run. And you can, of course, even manage your risk accordingly, right? But I want you to, again, profit aside, but I want you to take this as a very good case study. Okay, put it into a trading journal so that moving forward, right, this becomes a solid case study that you can always reference back as to why we take a trade, what are some of the factors that we have inside it, so that, you know, you can repeat that whole process, right? That's the whole idea about it. It's not about one trade that you win and then that's it, you're happy with it, but know what was the process that we put in order for us to reach to this trade here. Okay, so the target is still here, remains at 1.197. Okay, whether this is gonna go up today, very hard to say, but that's only about like 30 pips, 40 pips. Okay, 40 pips before it hits our target. If it does, fantastic. We have a 1:5 risk to reward ratio. Okay, but nothing to worry, because we have shift our stocks to break even, right? Is that updated that in the Facebook group as well. Okay, so so far so good. Okay, just wanted to get you guys understand why we are looking at this. Okay, so again, if you haven't watched yesterday video, okay, go and do it. because we talk about why we're looking at euro dollar. Okay, and I want you to put them together, right? What happened yesterday, and of course with the updates of what's happening right now. Okay, now again, this does not mean that you want to hold on to this buy for like long, because you want to see the big picture, right? What's happening. Okay, again, we are trading, as I mentioned yesterday, we are just trading that bounce. Okay, after a three-wave move to the downside, we're trading that bounce to the upside. Okay, so it's definitely a short-term one. So first off here, let's talk about those trades that we had, or we are kind of talk about from yesterday. Okay, so there are a few outcomes of the trade, right? So first off here, the euro dollar trade was great. Okay, we hit our target, okay, at 197. Okay, so this trade here, we kind of exited with through targets that we expect somewhat close to 1:5 risk to reward, right? And if you still remember, yesterday we did talk about how you want to keep an eye on this, screenshot this, put this into your journal. Okay, again, you know, it's one of like the, I would say, the ideal trade, very straightforward. You text us in immediately within the next 1 or 2 days or a couple of days, and we got out with where we want it to be. Okay, so again, use this. You know, it's not just about analyzing and then looking for an entry, but it's the whole process that you want to journal in, right? From before you take the trade, how you analyze it, and then the execution phase, right? How you actually decide to execute it, where you put your entry, where you put your target, where you put your stops, and then to the management of it. Okay, from how we actually saw price started moving, how we manage it, how we shift our stops, and that whole process. And of course, throughout these 3 stages, there are like the psychology, the emotion of it. You definitely want to have those in your journal as well. Okay, so this is just a very simple trade. As of now, we'll take this away because this trade is done. Okay, and of course, don't rush into it right now, right? So I'll take this, I'll remove it. Okay, this trade here is done deal. Okay,